on a Saturday, they need to understand that they will be thrown from a bull, and it ain't going to be pretty. And they need to be psychologically and financially prepared to sit through or buy through two or three 35% declines and perhaps one 50% decline.
Well, since I'm saying that I don't think we're in the blow off top phase, then almost by definition, that means there has to be some opportunity. Am I buying silver right now? Is it screaming north, or silver stocks? No. My last two purchases were uranium stocks that were. But let me push back on the question. As we speak, CNBC changed its previous Devil's Medal report on silver, which to have CNBC even cover silver at all was extraordinary last week, let alone a 10-minute video. Okay, they called it the Devil's Medal. This week, it's the Sleeping Beauty medal. And CNBC's talking triple-digit silver. So as a contrarian, I got to say, my contrarian wolf whiskers are twitching, you know. But more seriously, you know, even the most diehard silver bull will tell you that silver lags gold at first, and then more than catches up at the end. And I have been comforting myself by looking at the charts and looking at the numbers and saying it hasn't caught up yet. And if you look at the inflation-adjusted peaks, it still hasn't caught up. But I'm not sure that looking at the peaks is the right way to look at it. If you look at gains, well, where do gains come from? Not from peaks, they come from bottoms. If you look at the bottom in late 2015, silver has caught up to gold now. It has more than caught up to gold right now from that bottom on a percent gain basis. It hasn't soared way ahead, but it has more than caught up. And today, it's certainly rising faster than gold, something like 3 to 4x higher. It's a 1% up on gold, 3 or 4% higher on silver. If that suggests that we're in that catch up with gold phase at the end of the market, you know, you can't ignore the at the end of the market part of that whole thesis. I'm not saying this is the case. Put away your rotten tomatoes, dear silver bulls. But I'm just saying, A, be careful what you wish for, and B, don't ignore the data here. Like, you can be as bullish as you want, believe in triple-digit silver. Yes, I know that inflation adjusted, the peak is over $200. But, you know, silver is screaming north right now. And you yourselves have talked about what that means in the past. So you don't get to ignore that now that it's happening. And the big question is, you know, is this the blow off top or is this an adjustment? And Rick's former employers over there put out a report, and they're saying it's due to the supply side. And there's real supply constraints going on. I don't have access to the math on this, but I know that copper mines produce more silver than even gold mines. The number one single source of silver is copper. There have been 4 major disruptions in the copper space in 2025. I don't know what that does to the silver supply, but it has to do something. So this is my bull thesis here. Like, there are legitimate reasons to think that silver screaming north right now is not the blow off top of this bull market. It has to do with silver supply. And if so, that's extremely bullish going forward for both monetary metals.
Silver's behavior makes more sense when viewed from market bottoms rather than historic peaks. Looking back to the 2015 lows, silver has already matched, and in some periods exceeded, gold's percentage gains. Recently, silver has been moving 3 to 4 times faster than gold on up days, a classic sign of a late-cycle catch-up phase. That doesn't guarantee an imminent top, but it does narrow the range of possible outcomes. At this stage, investors must confront a key question. Is this a temporary adjustment driven by fundamentals, or the early stages of a speculative surge that eventually burns itself out?
Well, I'm on record 8 weeks ago as having been a seller. The truth is that the easiest money is the hate trade. You buy something that you believe there will be ongoing demand for over 5 or 10 years that is priced low, particularly relative to production cost, and we can talk about that in silver later. As Lobo said, primary silver mines generate between 18 to 20% of supply, so that thesis is tough there. But the truth is, the reversal of the hate trade is the easiest money for a speculator to make. Most so-called speculators, which is a different way of saying most losers, can't participate in the hate trade because they require the validation that comes from price movement to validate the narrative. And by the time that's occurred, the value of the narrative has been cut in half by price appreciation. The second thing is that most speculators, and I know this now from grading almost 100,000 portfolios in 35 years, most speculators that get the strategy right get the tactics wrong. They speculate in a print that will take 4 or 5 years to work, and they have trauma holding position over a long weekend. When the juxtaposition between your strategy and your tactic is that cattywampus, the probability that you make money is really close to nil, really, truly close to nil. People aren't going to want to hear that. What people who listen to these channels want to hear is silver's going to the moon. They don't want to have to question the narrative themselves. They don't want to have to believe they're taking risks. They want to take the credit for their success, and they want to assign the blame to Lobo, Tiggre, and Rick Rule. Fine with me. I will continue to trade against their prejudice. The hate trade's out of silver. I need to say, personally, silver represents about 2% of my bullion holdings. I own bullion out of fear. I save in gold. I maintain liquidity in currencies. And that part of my savings, which are in bullion, are 98% gold. I speculate in silver stocks, which are even more volatile than silver. So, for me, in a sense, the question now that silver is no longer hated is an irrelevancy.
One reason silver's rally may be justified lies on the supply side. Most silver isn't mined directly. It's produced as a byproduct, especially from copper operations. In 2025, multiple disruptions hit the global copper sector, from labor disputes to energy shortages and permitting delays. When copper supply tightens, silver supply quietly tightens with it. Add rising industrial demand from energy transition technologies, electronics, and defense, and the picture changes. This isn't purely a monetary trade anymore. If supply constraints persist, silver's strength could reflect structural pressure rather than speculative excess, an important distinction for long-term investors.
Well, since I'm saying that I don't think we're in the blow-off top phase, then almost by definition, that means there has to be some opportunity. Am I buying silver right now? Is it screaming north, or silver stocks? No. My last two purchases were uranium stocks that were down, not silver stocks that were up. That said, if I'm right that we're not in the blow-off top phase, the supply issues do get sorted out at some point. Those other secondary supplies come back online, and then we get a bit of a breather, which I think would be healthier for the overall market, for the longevity. If you're in this for the debasement trade, why on earth should we have a blow off top right now? When, are the governments stopping to print money? Right? No, of course not. So a healthy breather and a correction, I think, would be an absolute gift for anybody that isn't long silver already. I'm long, I can't lose on this. I'm long and I've taken profits. As Rick likes to say, sail beyond the point of no concern, right? So, it's challenging to try to put more risk on top of a risk-free position when you can't lose. But if you missed it, then that healthy correction and consolidation would be, a spectacular opportunity rather than, chasing things at all-time highs. So that's my default. But if, for all the people who are mad at me, no, silver's going to the moon. Okay, if you really believe that, if you're absolutely convinced, I'm not telling you to do this, but if that's what you think, the way to play that is to pile into the go-to names, as Doug Casey likes to say in the space, to buy the biggest, most well-knowns. For all the Johnny-come-latelys who just heard about silver for the first time on CNBC, and Kramer hasn't jumped in yet, so that's okay. Where are they going to go? They're going to Google silver miner, right? And what are they going to find? I don't need to give you the names. You know who they are. So that if we're in that blow-off phase, that last bit, that vertical leap is still ahead of us. And the go-to names, the big, most easily findable producers are the way to speculate on them. I wouldn't say gamble on that. So, that's as close as I come to giving a stock pick. There are very few in that space, so you know who I'm talking about. If you believe that, that's the way to play what happens next. Me, I'm looking for a pullback.
The most profitable trades often begin when an asset is deeply disliked. Buying something unloved but fundamentally necessary is uncomfortable, and that's exactly why most people miss it. Once prices rise and the narrative becomes popular, much of the easy money is already gone. Over decades of portfolio analysis, a pattern emerges. Many investors get the long-term idea right, but fail tactically. They panic during volatility, overtrade, or chase confirmation instead of value. Markets reward patience and discipline, not excitement. In silver, the emotional risk is just as real as the financial risk, and often far more dangerous.
Well, the lower quality silver names are stupidly overpriced. The people who have silver merely as a component of the name on the share certificate, you need to understand there's probably 100 silver stocks out there that don't have any silver. And if the price of something that you don't have any of goes up, it shouldn't have any impact on your material value. It does have an impact on your ability to get even dumber people on your register. And the industry likes dumb money. By the way, the institutional investors often qualify as dumb money. There were $1 billion in silver bonds sold over the last 2 weeks. I looked at every issue closely, and I couldn't find, never mind a compelling reason, I couldn't find a reason to buy any of them. It is interesting to see First Majestic Silver with a lower cost of capital than Codelco. And by the way, I'm a Keith Neumeyer fan. He's a friend of mine. He's made me a lot of money. I'm not criticizing First Majestic Silver. If $300 million was offered to me on those terms, I would have tried to upsize to $2 billion. I'm just questioning the sanity of the people who bought them. But as Lobo says, I believe that the dollar debasement trade has 10 years to run. I note that in the last 10-year run we had in precious metals markets, actually an 11-year run, despite the fact that the metals prices rose by a quantum, if my memory serves me well, 3 times during that run, the metals markets fell by 30% or more. And once in 1975, the metals fell by half. So people who intend to play the debasement trade need to watch Pro Rodeo on a Saturday. They need to understand that they will be thrown from a bull. And it ain't going to be pretty. And they need to be psychologically and financially prepared to sit through or buy through 2 or 3 35% declines and perhaps 150% decline. Most speculators that I know, most would-be speculators, actually Lobo did a great job of characterizing them as gamblers as opposed to speculators. People who think that attending casinos is an investment strategy. Most of those people, I don't think, have the intellectual fortitude to be classified as speculators. I'm not saying they're bad people. They have lives, they have families, all that kind of cool stuff. They're greedy, all good, all good.
If silver is not at a final peak, opportunity still exists, but it's conditional. Chasing vertical price moves is rarely a winning strategy. A healthy correction or consolidation would actually strengthen the long-term bull case, offering better entry points for latecomers. For aggressive traders who believe a speculative blow-off is still ahead, liquidity and visibility matter most. Large, well-known producers tend to attract the final wave of capital. Meanwhile, many smaller or lower-quality names have become dangerously overpriced, sometimes with little real exposure to silver at all. Rising prices don't fix bad businesses.
But I think all those people, and we could have this conversation about silver, about uranium, about tech stocks, about whatever. Most of them need to understand that the greatest risk that they face in their portfolio is located to the left of their right ear, to the right of their left ear. It's all about themselves. And silver is no different. I would note in the equities that there is, as Lobo suggests, a paucity of opportunities. On the speculative side, I see 5 or 6 names. On the investment side, I see 5 or 6 names, and I can find big warts on all of them. There is no brainer out there. There's absolutely no brainer. We are right now in the part of the market where, ironically, the least efficient producers will do the best. Guys that have the best in the market. I don't mean they'll be the best performers. If you are a $20 an ounce producer in a $40 market, you're enjoying a 50% gross margin. If you're a $40 producer in a $40 market, you're enjoying no margin. In a $60 market, the $40 producer, the $20 producer has seen his margins double. The $40 producer in a $60 market has seen his margins go up infinitely. And so what you see in this market is companies that offer leverage to silver will do the best in the near term among speculators. They're also the ones with the greatest risk. So, people need to take that into account. Names that have underperformed for 2 or 3 or 4 decades, that have abysmal track records with regards to capital allocation, that are fairly large but high-cost producers will scream in this market. And I guess if a speculator has the willingness and the discipline and the understanding to take that risk and be ready to sell in a nanosecond, that is to say, if he or she doesn't have a life and they can watch the screen all the time, there's great opportunities there. For myself, speculating is about probabilities. And it's about the juxtaposition between risk and reward. And so I see myself as opportunity constrained in the silver space.
Monetary debasement is not a one-year story. It's a decade-long cycle. History shows that even powerful precious metal bull markets include brutal pullbacks, 30% declines, and occasionally far worse. Investors must be psychologically and financially prepared for that reality. The greatest risk is not volatility itself, but an investor's reaction to it. Silver offers leverage, opportunity, and danger in equal measure. There are no no-brainers at this stage, only probabilities. Success depends on understanding margins, cost structures, and personal limits. In the end, silver is less about predicting price and more about managing behavior.